Okay, this is Simon with ToughTrader.com doing a trade review for at the end of the day for the 12th of October, and pretty interesting day. So I want to go over the pieces step by step. We're obviously closing down on the low of the day. We pretty much had a inverted V-shaped day, and so there's a couple of things to cover. Let me go ahead and so the way I like to do this when I do my homework is kind of come in with what my expectation was on the day and how that played out. So without pulling up the profile, the expectation was that we're going to start with ES, then we'll go to CL at the end of the day. So the expectation was that we had a large volume build from going back to yesterday on ES. We'll start there. Let me lower this. There we go. So starting with ES, we had a large volume build, and the idea was from the way we closed, we ended up with a trend day up, but within the context of not clearing the prior day's high yesterday, right? My thought was that if we could, my hope was that we would gap up or open flat and then drive higher. Everything was really in place for that to happen, meaning there was really no overhead resistance from a volume standpoint above us, right? Instead, we gapped down. We had the ECB president and two Fed speakers at 9:30 a.m. and the market opened kind of funky, and we've been in this real small rotation. We've been in this really small rotation really for weeks, meaning the large rotations have really been quite small. I mean, yesterday morning we were at 49 to 45. This morning, in this same kind of roll down, was 50 down to 47. So if you can imagine at 25.49, there's this big line of volume running right through and right underneath the white zone, right? So my thought process this morning when the tick opened this negative was that we weren't down very much. Okay, so what I'm trying to replicate is what my thought process was when I entered the trade, and the reason why I stuck the trade all the way out, which by the way I got stopped on, but right here at 25.49, which was right behind the 62 retrace, which I drew this and I said again, you really did not want it to the 62 retrace that the trade was over, and that the entire concept was really busted if we even came into the 50 retrace, right? Because the idea was we were going to come up, consolidate, and break out. So when we were in here, the first thing you'll notice is that the tick, let me spread this out, NYSE tick, when price is pushing down and tick is pushing up, and before I continue, I forgot to throw up the disclaimer. Since I'm going to post the video, I have to do it. Let me do it really quick. Past performance is not indicative of future results. This is for educational purposes only. I'm sharing my trade plan in hopes that it'll make you a better trader, right? Everyone has to assess their own risk levels and their own risk comfort levels for themselves so that they can make a good decision long term in their trading, right? My risk won't be the same as yours and vice versa. So I was really thinking we could push for a trend day up out of here. I was long right here at 25.48. Now, when we got up here and then we made this small little U-turn. This is about when I left, and I figured as long as we could hold this swing low, right, and we could push out, that I had a good chance of closing towards 25.60 to 25.65 was my goal to the upside, right? So I want to talk about that for a second. I could have very easily exited from 25.48, 25.48 and a quarter, and I could have very easily just said, hey, I'm at 25.53. Pretty good trade relative to the range we've had, right? So let's pause for a second and talk about trading decisions from that standpoint, okay? It's been really hard to catch these trend days up, and it's really hard to tell when we're going to have a day like this where it just grinds all day long versus we've had almost no U-turns to the downside, right? So when I'm making a decision where I'm going to take absolutely no scales on the way up and I'm going to pull an Awais and hold everything to target, right? This is a really important concept to understand, right? Because what I'm saying is that I accept the fact that we might come back and get stopped out, right? And I'm taking that risk in exchange for the possibility of having pushed all the way up into this 57 and 60 level up here, right? Now, in hindsight, right, when we were right here, I was looking pretty good. At about 12:30 in the afternoon, we were pushing a new high for the day, towards the high of the day, I was looking pretty good, right? What I see a lot of traders do, I want to take this moment and make it a teachable moment, right? I'll see a lot of traders say, well, I should have known that we were going to roll to the downside. And so the challenge there would be, if you knew we were going to roll over here, so you can point out to all kinds of things. You can point to the tick divergence at the high, right? You can point to the attempted break here on what was clear tick divergence, and Brian pointed out earlier in the day the flat tick divergence that was in here. So let me point out what the fault is in that thought process, so you don't go back and beat yourself up if you chose to take the same path that I took. You had all the same things right here on this push-up. We had tick divergence into new highs. We had new high print without the tick being able to maintain a high price. And because the market's gotten into this bizarre funk on ES in particular, it's just not a read, right? There is no read here. If there was no read yesterday, there's no read today. I can't look at the tick. And if anything, what I would say is we had the highest, strongest tick close in the since this push down, right? Today we had the highest tick close from a gap down and push up, and I would have read that as a sign of strength, and I was correct, right? I actually had a nice stretch here. So I wrote in my journal, I am swinging for the fences. I have zero risk on this trade. I've taken profits in NQ, which I had a nice day in, and I've taken profits in CL, right? And I'm affording myself this swing for the fences. And now I'm going, instead of getting mad and going, I can't believe it rolled over, I'm going to go, close behind the 62. I didn't lose any money on the trade because I closed out 25.49. So technically I made 3 ticks to 4 ticks on the trade as a whole, right? and importantly, right, I didn't get over here and throw a fit and go, there's no way it can come down, and then start trying to battle desperately to make the trade come back up, right? It was one shot, and I was very comfortable with it. And I talked to a lot of the guys when I'm coaching y'all one-on-one. I talked to a lot of y'all about understanding what does your trade look like when you are calling a shot. And this particular setup where we started, at least in this environment, that looks an awful lot like what my trend days up when we were at this point. It looks an awful lot like what my trend days up look like. And I wrote in yesterday's Twitter stream, which I have right here, so I want you to follow my thought process to see if you can adopt it, right? I wrote, that's not my tweets. Those are my responses, tweets. Here we go. I wrote, I said, have your list ready for trend day and failed trend day. Be aware that if we get behind the 62, if we do trend, I guess I didn't finish the thought, but the thought was, if we get behind the 62, we already all know what happens, right? We tend to fall apart and move down to the downside. And sure enough, when we got to the 62, we made a plunge for the low of the day, right? So I was prepared. What I'm trying to show you is I was prepared for this potentiality, even though my main idea didn't work out. I ended up making a little bit of money, and I didn't try to push it across all fields. So does anyone have any questions over that thought or idea? I want to pause just for a second and let someone ask a question if they have one. So just to summarize and be clear, so you have what the actionable piece is out of this. I thought because we were dipping below 25.49, if you can imagine, we dipped below overnight. I thought we were trapping sellers here. Tick was improving, and I thought that this could turn into a delayed trend day up after we got past our 9:30 speakers, and it certainly started to look that way. I'm certain there's something I missed that didn't happen here, but based on my own abilities, right, that's what I thought, and I decided I was taking a shot, and it just did not work out, right? And I stopped it at the appropriate place. I didn't take a loss on the trade. Okay, good. No questions. So that's how that worked out. This does not change anything, right? We are still, let me bring up the 60 minutes. Where is my wonderful, here it is. Okay, here is the, we are still above 25.45, which is where the volume build is, right? And we're closing right at 25.49 yet again. So important to realize, even though I got this part, let me blow this up, even though I got this part of today, I got it wrong, right? I didn't get it wrong in terms of losing money. I didn't get the trend up wrong. I got the trend up wrong, right? But if you look over here, oh, wrong screen, excuse me. Scoot it over. If you look over here when we broke out, see this line here where we were coming up against resistance and we were stuck underneath two builds. First, this build right here. So see this build right here? So this is an hourly chart. Remember that, right? So see, I'm going to draw a line right across. So see how we kept rejecting out of this volume build? We came underneath it and we rejected underneath this volume build over here, and we built up a lot of volume. See, this is from before, this was after, right? We then came up and we built a whole lot more volume right here from both this time. So we first had to get over this volume build. See how we got underneath it? And we built a new volume build under here. We broke out and see how it looked like it gapped and we went. And if you had given up on that idea or you read this as bearish, right? So I want to be really clear. If you read this move down as bearish, notice it never closed below the volume build. See that? It just pushed back down into it. That was day one. Notice either that same day or the next afternoon, I think this was the following day, we ended up with an open drive higher. We came back one more time, right? And we still held above this 24.98. Now this is the reason why this is important. If you read today's reversal as bearish and you don't get underneath this key area over here, this 25.45, you are setting yourself up to take losses on the short side that will not exist, right? You have to punch underneath, just like we would have had to punch underneath this volume build over here when we were on the lower levels, right? So it took one attempt and failed, a second attempt and failed, third attempt retraced, and then we finally broke into a trend. And what we were doing is we were banging against the top part of this volume build here to the left on the hourly, and then we finally got a clean open drive higher, and that's when we broke out. So if you take that same idea and you push back in over here, where is that? There it is. Okay. If you take this same idea up here, let me see if I can drag this in. There we go. This is where my volume build is, although I have a little lip over here to the left, right? Over to the left, correct. So we've tried one time and failed, but have not gotten enclosed below 25.45. We've tried a second time to push up above, and again, this lip has held us, right? So now I'm going to append my thought process. I now know that I need to hold above 25.49 to 25.44, that 5-point area in general. I'm not bearish unless I get below this build, and preferably with an impulse move lower so that I can get a backside test for a push down to the downside, right? But now I know that not only do I have to hold 25.49, which I think on the close here we're just closing right at it, 25.48.75, right? I now know I have to clear 25.52 on this top side, or 25.53, whatever this little lip is right here, and then I can really break free. But what I don't want to do is make the same mistake back here where we had a series of gives, attempts and fails, attempts and fails, attempts and fails. We may be doing the same process that we did back over here. They're just not making it easy for the upside break. Does everyone understand that and have any questions? Did I communicate clearly? The actionability of this is not necessarily, I'm still looking for longs in here so long as I don't penetrate with an impulse move below 25.45. Is that clear? And I'm not looking for shorts as long as I'm hanging out in this area, unless it becomes obvious that I need to be shorting or fading this level, but I'm very uncomfortable at the top. Someone's asking a question, so go ahead, Randy. Okay, great. So now let's get rid of this. Oh, I was trying to do that with a different computer. Forget. Okay, next. Let's go through NQ really quick. So tick is, by the way, tick is getting healthier. If I go through the course of the day here, right, I want to cover that really quick even though I wasn't here to trade it. So if you look, first push back into the 50 retrace, right? So we came into the volume point of control from Wednesday, rejected down, came into the 50 retrace, biggest negative tick of the afternoon, right? And failure to push below prior swing low, result, push back up, retest of the high. This is where we really got into trouble here, over here to the left, right? And you can see we pushed down, we came up to backside test this location again, got a little choppy, but this bar right here was the death knell. that close behind the 62 retrace is so subtle, but it hammers so many traders when you get this close that you just should know if you're pushing along and you get this close here, do yourself a favor. This time it really didn't get all that ugly, but it can get very ugly on a push to the backside. I'd like to hammer this into every trader's mindset that I possibly can. A close behind the 62 when it looks like we're trending up, right, is not very good. And if you're bearish, this is your clue that we might, if you're looking for an opportunity to short, this is your clue that we might be short. The problem is you ran smack into the bottom of that balance area that I was just showing you at 25.45, right? So let's go over to NQ really quick. So I want to show you what I was trading without going through the profile itself. This morning, my first push down into this location, I was trading the backside of the build in this area. If you go and look at a build, I was looking at where the volume and where the structure was over here. That's why I wanted long. NQ has been very strong over the last couple of weeks. And given this first push down, so we had two things. Not only did we have structure to the left, but also from a 24-hour standpoint, we had and a TPO standpoint. So the room's shifting a little bit, right? I'm shifting a little bit how I point out where the trading opportunities are, and I'm using more price action more actively, right? And I'm using the prior day setups, for which I've always done, using the charts, but due to the lack of volatility and because of the nature in which the market is changing, right? The way in which the nature of the market is changing, meaning it's the way it presents itself has changed a little bit. So I'm adapting with that along the way. So I took an early trade. My risk is in these early trades is that I ended up with a rip to the downside here, right? This was the other day, and this did push all the way to just behind the white zone, if I remember, and it did break it. I don't remember how this day laid out where the white zone was, but it didn't matter what you put here. You got smoked through this process. But just like on Wednesday when we were working this 60-60 to the backside, right? And if you'll notice, that was backside of structure into that prior afternoon. We were working the backside of the top side of structure after breaking above. This was the first time back into structure from above, and that's what I was working to the long side, right? The second entry that I took long was so the first long was in here. That was my first push, and I scaled into 60 all the way from, I think, 60.78 all the way up into 60.81. Why? Because that was resistance. That's where the opening print came out, right? So I want you to go through so you can mentally see it. I knew I had a white zone. I knew the pressure down on ES wasn't that significant. The market's been in a general uptrend, which means I'm making the assumption that buyers will try to step in. The first 5-minute bar was green, right? And we had not traded below the afternoon swing low. Okay, so those are checklist items that you can make, right? The gap down was minor. We've been in an uptrend since 11:30 a.m. 2 days ago. We haven't broken that uptrend to that point. We had not broken that uptrend, and we had failed to trade below the prior afternoon's swing low, right? Not the days, the afternoon swing low. We pushed right into that 68. And so I was willing to work this entire area. I forget where my exact fill was in here for the long. My goal was to get it back to 81, not the gap fill even. The goal was just underneath 81. That was accomplished, and I had pretty decent scales into this area, right? And then the goal again was I thought that we could trend up for the day. And I said when we were down here that if we could punch 60, 80, 81, and we could punch above and close above on a 5-minute, right? So what am I looking for now? I'm looking for this was resistance, and my thought process was that we established structure here. If we could punch above this structure, again, without going into detail on the volume profile because I'm too tired to do it right now, right? If we could punch above here, my figuring was that we would not roll back below, that this would trap early aggressive shorts who were trying to push to the downside, and that we would push above Tuesday's high. That was my goal, was to push up towards 6,100, right? Now, remember, in all this time frame, I scaled here. We pushed above. I scaled some more into this. I reloaded 80, I want to say 81, 83, if I remember, but it might have been 81, 82, or 82, 83. I forget what combination I used, but I reloaded right here, right? Dumped probably half. I don't remember how much I exactly ended up scaling, but half right in this area. And then I closed the whole position, including the long from here, plus the addition over here. at 60.95, 60.96, I think was where I actually closed it, right? Because this is where I left for lunch. But my other reasoning was, remember, I was loaded up over there on ES. ES is offering me two things right now that I was willing to bank on more on ES than I was on NQ, and it's important that people understand my thought process on it, okay? NQ's been more volatile than ES has, even though volatility on both products across the board have declined significantly. If I am going to make a bet where I'm actually leaving the office and I'm just leaving a stop in place, right? The rotation's down on, so here's the rotations on NQ, and on some mornings they've been pretty freaking vicious, right? They've been really big. Now look at the rotations down on ES. They've been pretty damn minor, right? Outside of this day here, but even within this context, we're not getting more than 1 to 2 points. 2 points has been a stretch, right? So if I'm going to leave a position parked where I think it's going to grind all day long, I want the one that I think has the least likelihood of pushing back. And for me, that was ES, right? So again, and then the last piece was just from a balance standpoint, right? This pays for, if I took both of these long at the same time, both of them pretty good positions in both products, right? When you're going for a home run, if this had come up to 2066, I would have done just fine. But what this does is by taking this trade off, right? Two things that had gotten accomplished here. First of all, I was in near the bottom of the rotation, and I accomplished almost a 30-point rotation. 30-point rotation is pretty typical for a full rotation, except in the strongest markets, both down and up in NQ. It made sense. Versus in ES, it's 10 points, and we had not accomplished a 10-point rotation up yet in ES, right? Secondly, the idea of going for broke all the way across the board versus padding my account. I could take my profits out here and add to my P&L for the day, along with what I had in CL, right? And relax and let this be my home run, right? And not be upset if this comes back and tags me out, versus if I held all of these all day long, I would have been just devastated if this came back in, because this is a really good, this little run right here is a really good run on the day for me, right? So that's item number one. And item number two, that explains my logic for dumping this position out. Was I know my rotations, 10 points in ES, 30 points in NQ, was cognizant of it, right? And I was choosing the lower volatility of the two markets to take my ride on, and it didn't work out. The actionability there is when the odds that you're going to push beyond a full rotation out, right, are very, very low. And remember, my upside target on this from 48 was really 60, so 58 to 60, 10 to 12 points. That was right in the wheelhouse of a good normal rotation that we've had recently in ES. This was 30 points, and that's been about all we've been getting in NQ. So I figured at least that we would trade sideways and work it off, and then maybe run up at the end of the day. Again, I had a pretty bullish mindset coming in. I wasn't really thinking rollover, and I'm usually not thinking rollover from the highs. So I'm totally comfortable with that. The actionable piece of this is, if you have a smaller account and you get in onto a good position, right, and you're loaded and you have the ability to either scale, so you have to make one or two choices. I scaled via risk of the total risk on the account. I scaled off NQ, and I held on to ES, and I scaled off. Obviously, I took out CL completely, right? So I still reduced my overall risk in the market. Does anyone have any questions about that? None. Okay. Let me give the last piece, and then we'll roll through CL really quick. The last piece is this. See how these are both trending up, right? You know what we don't want late in the afternoon? See this? I'll keep saying this over and over again. You don't want the 50-60 back. Okay? See how the 50-60 busted here? What time is it? 1:30 in the afternoon. What time is the 50-60 back hitting? 1:30 in the afternoon. 50-60's back late in the day are no bueno on days you think you have a trend day in hand, right? If everything is showing you uber bullish, right, you have good reason to be concerned about the fact that we've come even close to a 50 retrace in the afternoon. This should be consolidating near the highs and ready to break to the upside. It should not be pulling back like this. This argues for balance. Once we got this at best, which is exactly what we ended up with, was a balanced balanced day. You also penetrated above Tuesday's high on NQ and above Wednesday's high, and in order to get the 50 back, you had to trap back in on both sides, and you had to get back below Globex low. That's like three major pieces, right, that you're getting stuck underneath. Tuesday's high, Wednesday's high, Globex high, and IB high. That's four major pieces. Like, think about if you're trading, right? Just go through that checklist and think about it. There's a trader trading against IB high, right? There's a trader trading against Wednesday's high, and there's a trader trading against Tuesday's high, right? If you've trapped underneath all four of those and you've come back in for the 50 in order to grab the 50 retrace on a day you're thinking trend up, this move here should not be a surprise, right? And then one last piece that I want to go through that's really, really important for everyone in the room, right? That's if you're trading all day long, right? I don't know what time y'all start your day, but I start mine at either 4:30 or 5 a.m., right? By the time I get my workout and my meditation and help out with the babies a little bit, if I don't get up at 4:30 or 5, I don't have time to get my stuff done, right? By the time I'm over here, right, we've been pounding this thing for 5 hours. It's hard to think clearly through this and continue to make a lot of money through the course of the day with high quality decisions like what might be obvious, which is a break of Tuesday's high, break of Wednesday's high, break of IB high, break of Globex high. All of a sudden that disappears to I'm a little bit tired and I'm just focusing on a 50-60 retrace, right? And plus, if you've nailed it through here, right? If you nailed it, this was the easiest part of the day. And I want everyone to think about why it's the easiest part of the day. It's the easiest part of the day because as this market's volatility drops more and more, you will have fewer and fewer people trading later in the day. Look where all the whipsaws came, right? All the whipsaws came in the morning, right? And then we just slowed and grinded down. If you didn't know we were going to roll over like this, like if you look at most afternoons, right, on ES, look at most of the afternoons. It's just been small sideways trades, right? Very little big rotations down. Most of the afternoons have been slow grind through affairs that have taken forever to get their moves, right? Most day traders, right, don't have the ability to withstand sitting through these little rotations, so they stop trading, right? They try to the AM, they try to get it right, and then they leave, right? So what you're doing is you're getting into thinner and thinner markets until the market picks up on its volatility, and once it starts picking up its rotations in the afternoon, then it becomes easier to get crisp, clear snaps, right? Like off the 62 retrace, we don't close behind it, right? We close in front of it and snap right off. Little changes like that occur. This is trading more like late August than it is early October, quite frankly. So that's my last piece on that, right? I do want to go to CL if everyone has the patience for it really quick. Any questions over that? So I quit trading here. I had my last ride. I already cleared out my NQ and I determined I wasn't going to get back my profits of the day. The single hardest thing to do, as highlighted by both Denise Schull, Brett Steenbarger, and every other trading coach on the face of the earth, is to hold on to your profits. Making trading decisions is a hard business. It's not easy, right? And it's hard to keep your quality decision making at an ultra high level. And I know I'm tired by 1 or 2 o'clock in the afternoon. I'm tired. I don't want to keep making trading decisions. I want to come back fresh the next day. No questions. Okay, cool. Let's roll over to CL really quick. This is on the other computer, so we're going to deal with the suboptimal graphics. Let's see if I can find it. Okay, so before I do that, a couple of pieces. First of all, on the chart itself that was posted last night, right? This was the white zone overnight, and we spent all night long underneath the white zone. Item number 2 on CL was it was inventory day. Inventory day brings up weird moves, like straight up, straight down kind of moves that can be really, really frustrating, right? So the volatility is contained. These kind of moves used to come over 200 ticks. Instead, they're coming over 40 and 50 ticks, right? But you're still getting crazy Ivans through here, right? Slam down, slam all the way up, slam all the way down, slam all the way up. So that's the danger in trading inventory. You think you've got one direction or you think you got another direction. And for traders who want to sit patiently in markets like this, it's very hard because you get ripped back against really hard, right? From a perspective of where I was looking location-wise, Let me jump over to that other computer. We have, see where it is, GCLX, 60 minute, 10 minute, there we go. Okay, so you'll see I was looking at a various number of draws through here. This morning, I'm going to spread this out a little bit. Okay, so this is about where I started trading. We'd already made a downside break. You'll notice that we were having lower highs and lower lows, right? So a couple things are important, right? You got to go to a bigger time frame, right? And the first thing you're going to see when we go to a bigger time frame is that those higher highs and higher lows, oops, wrong way. Let's bring it back in. There we go. Right? It's only lower highs and lower lows within the context of approximately a 50 retrace here, right? I'm not going to draw out the retrace, but this is approximately a 50 retrace in here, okay? So it's not bearish, right? Ultimately, this swing low over here has to be taken out. That double bottom there has to be taken out in order for me to really get bearish. I know that this area is relatively poorly auctioned, and I know that this is approximately the mid, right? And I know from the breakout, right? We've been reviewing this. If you look and you come into a, I've been using a 10-minute bar, but you can use a 15-minute bar, right? So if we use this over here to the left, right? That was my breakout bar right there. If I don't get underneath this breakout bar, right, from this whole sequence through here, right, this is my biggest breakout bar right here. If I don't get underneath and hold underneath that bar, it is not bearish. There's just no two ways about it, right? And if you look, what we did is we retraced all the way down to the low of this bar, but we did not break it. Let me retrace all the way back here to the left. And when they finally shook it out, they still couldn't get below the low of the bar, which is why, if you look at how big this down bar is, right, a lot of effort. Let me see if I can insert something here. Okay, so first of all, this bar is really, really wide, right? Really big ease of movement. Biggest down bar since over here, right? Notice when we got this nasty red down bar, see how when they come off the top, they tend to create the beginning of a downtrend, just like you got this one, began the beginning of a downtrend, right? But we've already rolled down. We've rolled down from 51.30 all the way down to 50.30, and we haven't consolidated down here, and we haven't made a U-turn back up where we consolidated up here and then made a punch, right? So notice the qualities here. Consolidation, then punch. Consolidation, then punch. Long consolidation, then punch, right? And that had follow through, consolidation, then punch. This was push up, shake out, and so what you ended up with was the biggest bar that didn't come out of consolidation. While it was on big volume, it wasn't the biggest volume of the day. And then when you come back over here and look to the left, all right, what did we do? We failed to get below that double bottom on the biggest attempt of the day to push down, right? So that's all. You're just having to go through a checklist there of what's actually happening on that push down in CL, right? None of that happened. Again, I wasn't here to trade this, and you got to remember my short was, which I did not take after the beginning of the day, right? Because we already had oil inventories, and I wanted to give it a good hour till I took a trade, right? The reason why I wanted to give it an hour is even though I know the trade went in my direction from 50.90, I could have just gotten run over, okay? Number two. This morning, my long was from 50.25. That was my first long back over here on this bar. That's where I got filled, right? So without going into detail as to why I took it, other than to say if you look over to the left, the answer's over there. The answer lies in back over here in this structure over here to the left, along with this breakout bar. That's why I wanted long in that area. I took that 50, but there's nothing direct to point to. It's just me looking at the chart going, we probably respond there, right? That was a prior breakout bar from morning session a few days ago, and I just thought when we retested it, we would push, and my stop, if you'll notice, was below this breakout bar, right? So we came in, and I pushed up, and what was my upside goal? Right back into structure over here, 50.55, and I actually scaled it at 50.45 as I couldn't get back into the structure I was racing against getting out in front of the inventory number, which is good because it slammed down after inventory, then it slammed right back up, right? You got to remember in oil that as much as we're turning that Rubik's Cube back and forth in ES and NQ to get it right, that we have an underlying driver going on in ES and NQ that doesn't allow it right now to have this kind of price action. There's no fear in the indexes. When you get even a little bit of fear and uncertainty, see how we get these two-way trades? This is how NQ used to trade. We'd push up, we'd push down, we'd push up. We don't get that anymore, right? We're all begging for small rotations down, and we can take the longs pretty confidently. That's what adds to that next level of challenge in CL. So what I'm doing is I'm looking for structure, right? And then I'm trying to estimate based on prior volume builds, which is a little bit of an art form, right? There's really not a science as much as there is an art form. And then I'm looking at volume both by time and volume by price to determine, and total rotation size. The key rotation there is 40 ticks, right? And if you look, we went from 50-80, 50-40, and then we made almost a complete 80 tick rotation here before we found responsive buyers. And you've got to keep up with a pretty large map on CL to understand where everything's coming and going, right? You have to have a pretty good map, and if what you'll notice is that we constantly do these U-turns, right? So at any rate, the longs today, and by the way, I would have gotten blown out the second time today. I would have gotten stopped, and I don't know that I would have been able to get back in. I would have gotten stopped had I been here on this bar if I had chosen to trade, which is why I specifically try not to be active. On the flip side, if I had stuck this 50-90, I would have had a 70 tick trade to the downside. So you could say it either way, but I can say confidently if I double dipped into this area, or in this case triple dipped into that 25-30 area, I would have gotten stopped the last time. Although I think my first time my stop was 50.05, so maybe not, because 50.10 was the low. I think 50.05 was the stop. 50.25 this morning with a 50.05 stop was my overall stop, if I have it correct, which I think I do. So someone can correct me if I'm wrong. Anyways, long story short, that's what makes CL harder, but it's a fantastic trade. You can make a lot of money in it. That's 30 minutes, guys. I think I covered pretty good. Any questions? Hopefully y'all find that helpful. The trading's gotten pretty good in CL, and I've worked really hard at refining my entry locations, so I will continue to point those locations out. But I can tell you I'm getting pretty close to aggressively increasing my trade size on CL. Yeah, and we were underneath that white zone all day long. I'm with you. What? So Randy, you're right. So my structure here at 50-90 was based on what happened overnight. The white zone was based on prior builds. So you'll see me adjusting to that. And if you remember well, okay, I agree, but what I'd have to do every day is scrap the white zones every time. And if you remember, I said I was taking 50-90, but my stop had to be all the way up there, right, at 50 inside the white zone, right? So this is part of when I change up, when I'm having to respond. The volatility has dropped in all products, right, significantly, right? So this is my response to that drop in volatility to produce P&L, and it requires me to read the price action in real time and adjust the structures as they're going through. Essentially what I'm doing is redesigning zones in real time. Make sense? So I understand why it makes it tough, but I don't have a choice, right? I'm with you, but I sat there for many weeks without putting any P&L on the table, and the way the market's been responding, the white zone, like you said in October, right? In October, the numbers for the white zone in CL dropped significantly, right? Which isn't bad. It's fine. An off month is acceptable over the course of 12 months, right? But for me, I needed to respond and find and add to what I normally would do to my scalping to produce the P&L that I need to make. And so I don't have a solution for that. The only other solution I could do is come in and just not produce any white zones for CL and just call my locations, which is what I've been doing the last couple of days, except I'm still producing the zone. And the idea would be to stack it. So if you'll notice, we essentially targeted the white zone, right? Let's assume I had it off by a little bit. I think I had the zone over here. So from this location, right, If you targeted the white zone, it hit it. And then if you were looking, structure shifted down to the left. It was up here. It shifted down and to the right to come below the white zone, right? So technically I could have just gone and said, hey, trash the white zone, move it down. And my response to doing that is just calling where I think the location is once the market's updated in real time. I hope that makes sense. I don't have another way of explaining it. Anyways, that's it, guys. I am wiped. I'm not going to be here at 10 o'clock tonight. I hope this helped everybody. I'll continue to try and make everyone as good as I possibly can. It's hard. This is not easy. We're at all-time highs. We're with no volatility. We have zero volatility and very few clues through the course of the day to read the tea leaves. And, you know, hell, I can imagine a lot of day traders really getting smoked in this. Yeah. And when we were having more volatility, we were getting, you know, it wasn't but a month ago we were getting two zones a day in ES, right? Now we're lucky if we get one, and usually we're getting it right out of the gate, which makes the decision much harder, right? So you'll see more trades coming in NQ and more trades coming in CL, only because there's absolutely zero volatility in the other products, unfortunately. So I'd like you all to succeed. Have a good night, guys. I'm going to get these charts hammered out, sent out, and we'll come back and do it again tomorrow morning. I intend to focus the majority of my efforts in the morning, unless we end up with some kind of rip-roaring day. I wouldn't have caught anything but stress this afternoon because I'm not going to short until we're out of this area. I don't short tops. Okay, guys. See y'all later.